All right. Okay. We are going to look at some charts. Yes. We're going to do this again. All right. Okay. So, prepared some images, and yeah. So this is dollar yen. This is 1 hour, and these two I did not see the trade after I took, but yeah. So I'm going to give my ideas on these. So price has been coming up, came to, let's do this thing, and let's see if we can. It's probably fine. We came to this level here. Actually, I don't like that brush. It's drawing time. Yeah, we came to this level here, all the way up to here, right? So this should be strong. Notice the big bar and imbalance, right? And price keeps falling down. Now, notice, on the way falling down, we create here a gap. Doesn't really matter, right? We came here, gap. This red candle outlined by the circle and dash. This red candle breaks power for me. Now the power is down, okay? Because we have a gap, not very substantial, but very visible. This is 1 hour chart after all. We have the gap here, from here to here. Price should be strong from this level going down, and then retrace into it, as I have put the graphic from the trading view here. Short should be here, stop should be here, and this target is next level where there should be some interest or whatever, and it's actually this, you know. This is maybe red or maybe green, I don't know, but yeah, for me this is where it's at. So this coincides with this thing. Also, this thing is, well, a little bit lower, and it's the same area, but it's just the same structure, it's just a bit lower. So basically the same targets, right? So we have gap, we retrace, we go back into it, and a limit order, and enter, and go further down. And the same scenario here, you see, we create lower price. We have 1 candle, 2 candle, 3 candle gap. Notice the FVG here and here, and retrace back into it, not here, but here. We retrace back into it, we respect it with pin bar, and we go further down, and it happens again. And here it's taken out at a different level, but yeah, H4 FVG. But anyway, so the idea is this. Oh my god. The idea is this thing. We change to short. We create power with the gap, right? FVG. Or, well, this is my interpretation anyway, that we create power, right? And we use RPC concept. And it's pretty much RPC is pin bar validating gap or power bar like this. So C is this, for example, this green bar here, stinging into it and going down, and then continuing like this. Or with this second example here, let's make it big. With the second example, RPC is this green bar here. Notice we had power from here, we come all the way down to here, we create a gap, and the green bar goes into the gap, rejects, price does not want to go higher, and we display force like this, meaning we should want to go lower, and it's reinforced by engulfing bar that's created by the green red after. Also the same happens here, right? So that's the idea. So we change the power and we respect it again. Right, so that's this example. I'm just gonna close this one, I don't need to save it. We have another example here. This one I took, this is from yesterday, I think. I was looking for EU shorts on 1 hour, 4 hour was checking charts and looking at what's going on, and I notice, well, we have small gap here. Not very strong, but I mean, come on, at least we had something here, and this thing, and orange, right? There was some gap here, some display of force dually, so we get a H4 gap on another chart. We got the M15 chart right here. This is M50 chart, and so if the faster chart is displaying the same power as the slower chart, it's stronger, right? What you're seeing is stronger, right? That's my idea on it. So I was thinking, I was here in the morning and I was looking at this, thinking that, okay, we retrace back into power, and several indications here of power down. We have the green plus the red. Let's zoom in. So power should be here. We have the green plus the red, indicating power down. We have the green, but covering red down, indicating power down. We have red added to these two, indicating power down. We have the pin with the spike up, indicating power down, and we have the engulfing of the pin, right? So at somewhere in this area, I entered the market short with stop here, and a higher level TP on H4 I placed here, and at this point in time here, I saw this action. I pushed the stop to this level here because I had to do something else, which was probably a bad idea because it ended up working out, right? And yeah, 2 of my accounts got like 3 pips instead of all this thing, and it's like, I don't know, what is it, 2R something. That's cool. So quite nice. So I'm currently considering not moving the stop because, well, as I've said before, the trailing of the stop does one thing, in my opinion. It does make the equity curve look better. Does it increase profitability? I'm not sure on this so far. If I was at this level here, where we had the last bar, and let's say my target is here, and I see this bar, yeah, okay, and then I see the red one, I would probably put the stop here, locking in all of this, right? I would lock in all of this. That's okay. If there's just like 1 pip left to go, fine, that's okay. Pushing the stop down 1-2 pips and being in profit, so to speak, I don't like that concept. But I wanted to not have to check the trade. I just wanted to take it off my mind, and so I did it this way this time. And yeah, we'll see about what I do later on. So yeah, also the trade is here, the signal is here. This is the level, this is the second level, and for this particular trade, I used the stop up here because I have recently had an idea about let's cover double gaps as double levels. But you know, actually, when I think about it, I'm wrong, because the power is indicated here, so this is one level in this box. We have power here, right? This is strong. It indicates power down, right? Second indicator is here. And the fact that I put the stop up here just to cover double gaps is worse. So this is 1.7, I think it was 1.8. Stop here would make it 2.4 R, that is. So anyway, that's that. It's all history. Moving on. Okay, next one. Dollar yen. Yes, with a switch. Yeah, this one was interesting because this one happened at nighttime. Notice the time here, 3:06. Yeah, I'm not at a chart at this time, but I want to give my idea on this anyway. So we have had, let's go with, we can go with blue this time. We had power here, price came down, we had power here, we came down lower, came to this level, we came to this level. This is same, this is box now, right? Because this is the same level as this, because it does not close below. So we had strength here or here, we don't know, right? Now we go up, okay, cool, and I should enter on a retrace here. I'm not looking at this chart at this time, right? Anyway, so price keeps moving on and goes lower here. Now we did lower from here, right? So now price is down from this level. So this is strong now, right? And notice we have covered all the like here, we covered it here, we covered it here. This is the only level that is strong because OB, because gap, right? This is strong level. Now we are here, we go further down, right? From this level, so this should be strong. And we continue sideways during a New York session. Look. We continue sideways during New York session. Price eventually breaks to the upside on force. This is USD JPY after all, and the gray box means Asia session. So lots of power up, breaking through and leaving this huge tail respecting this level. So this bar should be an entry long if you, well, like that. But anyway, so my idea is that, well, we see, okay, power up and we come back down. We respect the low like this, you see. Price does not want to close below. We create red, we create green. Red plus green like this, harami low, meaning a power is stopping here. If power is stopping here and respecting the low, what does that mean? It means let's go. It means let's go up, right? So the idea for the trade is place the entry. You notice here's the gap, and just, yeah, it's here because this is the top of the green candle, and these three, red, green, green, I think it's called Morningstar formation, meaning power up. This price action formation with the rejection of low, stop should be here, entry should be here, and we know target should be here because this is the last level. We should have liquid here. That's why it's here, because we defeated all previous liquid points, right? And if we defeat this, we should, this has already been coming to, and we should go to this level, which, well, fairly close, right? But yeah, so that's the idea. Entry on the signal, respecting the low, holding to the next level, and that's why it's like this. Interesting price formations. And yeah, as just another example of my ideas and how I interpret this. And yeah, if I was part of this market, if I was here at this time, I would definitely play it like this. Anyway, so I think that's it for me at this time. If you like the video, like the video. If you have questions, post your questions, and yeah, that's pretty much it. I will see you in the markets.